morning. Welcome, everyone. Thank you for joining us here. I'm Matt McKenna with SCORE Middle Georgia. We're really excited to kick off our small business series, collaboration between the Greater Macon Chamber of Commerce and SCORE Middle Georgia. SCORE is a volunteer organization that provides mentoring and education for small business owners. Per our mission to foster vibrant business communities, we're really happy to be able to bring you this series. So thank you for joining. I'd like to turn it over to Andrew Eck, who's the Vice Chair for Small Business Affairs at the Macon Chamber of Commerce.
Thanks, Matt. The Chamber is excited to partner with you and SCORE mentors to provide this critical content to the Middle Georgia small business community. Today, we welcome John Hauser. John Hauser is a certified public accountant and certified valuation analyst. John's work experience includes public accounting at Arthur Anderson and Company, managing partner at Miller, Ray, Hauser, and Stewart CPAs in Atlanta, and a stint in commercial real estate development. John moved to Macon to become CEO of Southern Trust Insurance Company, a regional property and casualty carrier. In 2017, John resumed practicing accounting at McNair, McLemore, and Middlebrook Company in Macon, Georgia. He served as counsel in the firm's litigation, valuation, and forensic practices groups, concentrating exclusively in the area of litigation support services, bankruptcy valuation, management advisory services, forensics, and various tax areas. So John, I'll turn it over to you for your accounting presentation. Know your numbers.
All right. Thank you, Andrew. Let's see if I get this right. Well, okay. So can everyone see the slides? Can the people at the chamber see the slides?
Yes.
Okay. Well, my name's John Hauser, and as Andrew said, I grew up in Macon and went to college in Atlanta, served some time in the Navy, stayed in Atlanta for 30 years, and came back to Macon. And 3 years ago, I went back to work as a CPA at McNair, McLemore, Middlebrooks in Macon. I'm proud to be here. I want to ask everybody to get a virtual donut and a cup of coffee before we start in on accounting. And anybody that has a question, I wish you'd go ahead and ask it during the seminar. It might go better. What's not on the slides, and I thought I'd go ahead and cover it, is the effect of the pandemic on accounting and on your daily business and what you do every day. And so I'd just like to run through the effects of the pandemic on accounting, and probably the most sought after question is, what do I do as far as my books go with the PPP money hopefully you received in the springtime? And the answer today is, let's say you got a $25,000 PPP loan from Cadence Bank. How do you book it? Well, we'll get into double entry accounting later on. That's the really boring part of this seminar. But you should have it booked as you put it in your checking account as increased your cash, and you book the other side of the transaction as a liability to the bank. And then how you ultimately book it depends on whether or not it's forgiven. And if it's forgiven, how did you use the money? Did you spend it on salaries and rent? It's probably not going to be income to you. But you need to call your CPA or your bookkeeper or whoever you use to find out what's the right way to book it. But you don't need to do anything until you send in your forgiveness application, which I think is due. I think it's bank by bank, but it's definitely due this fall. The next question is, what's the pandemic going to do to my tax rates, my corporate tax rates, my individual tax rates? Well, if Biden's elected, he's already said they're going up, probably 10% or so. And with Trump, they're probably not going to go down either because we got to theoretically pay this money back. Another thing it has an effect on is if you're trying to borrow money from a bank today. And if you're trying to get an SBA loan, the SBA has just come out with a series of questions that the loan underwriter has to answer about your business as it affects the pandemic. How's that pandemic going to affect your business? And in business valuation world, could be good, could be bad, depending on what business you're in. If you're in a full-service restaurant business, most of the outside information that business valuation people rely on is not good. If you're in a business that's done, a restaurant business that's proven that you've done well with outside sales, with drive-through, it may be no effect. So as far as valuations go on a loan, depends on how you're doing. Financial statements, if you're in a business that gets an audit, it for sure is going to get a footnote. Banks, I don't know if you watched what's happened to banks in the stock market. If you used to own Security Bank shares and now you own Cadence Bank shares, Cadence took a huge hit the first of this year in their stock price. It's gone from 18 to 8. Primarily due, they have a huge portfolio of oil loans, and they have a huge portfolio of restaurant loans. The market probably overreacted to the restaurant loans, but as I understand it, a lot of oil is literally worth a negative amount because it's worth X dollars where it was drilled, and the cost of transporting it to the ships in the Gulf is more than it's worth. So Cadence took a big hit on oil and gas and restaurants, and that was a huge percentage of their loan portfolio. Same with insurance companies. They've got to increase their reserves because in hard times, rather than get things fixed, people defer maintenance around the house and on their car, and the house, they might have a fire because of some faulty appliance that they should have had fixed. The Macon economy, maybe Andrew Eck can tell us at the end of the meeting how Macon economy is doing. I don't know. The court system, if you've got a business matter in court, well, you know the answer there. They're backed up. That's about it on PPP, but it reminds me of something that the president of State Bank told me one time, that the drill sergeant over at Paris Island told him that if there's a bullet coming for you with your name on it, there's not much the drill sergeant can do for you. What the drill sergeant will teach you how to avoid the bullet that's coming marked to whom it may concern. What I'd like you to take away from this meeting is if you're new to business, why is accounting so important? It's very important, and not just because I've been at it most of my career. It's important. How to use accounting, an understanding of accounting. If you have a small business, how that can protect you from fraud. You can't be at your workshop every day or at your business. How does it? Just having a general understanding of accounting and a few simple techniques can prevent you from suffering fraud. And I'll go over a couple of, if you're a small business, things you can do on a regular basis that ought to prevent serious fraud. I want you to gain a good appreciation of accounting records. And since it takes 5 years at the University of Georgia to get a degree in accounting, we're not going to learn how to prepare financial statements today. I just want to give you an overview. I went to Georgia Tech, and I went back and looked at my resume, I don't know, 10 years ago, and I noticed the only course that I dropped while I was at Georgia Tech was accounting. And I went back to Georgia State after I got out of the Navy and took accounting. Why is it accounting? Why is it important? It's the language of business. If you're talking with your buddy and he says, how did your business do? What was your gross margin? What were your sales? Well, unless you have good accounting records, you really don't know. It's very important when you go to obtain financing from a bank. If you don't have a good accounting records, you might as well go home. Again, internal controls. And if you have good records and quality daily reporting, you can measure the success of a new idea pretty quickly, like a new menu item. How is the how are we doing on profitability of the new pizza we put on the menu? How to use your business, how to protect your business from fraud. I'll let you read that, and that's really not too far from the truth. There is, unfortunately, a lot of fraud in business. A couple of the biggest frauds of our lifetime was the Enron fraud. This fellow right here, he knew a lot about accounting and masterminded a tremendous fraud out in Texas. The one closer to us is the WorldCom fraud. How did they do that? And again, it'll get back to double entry accounting, but WorldCom was a telecommunications company, and they built cell towers. And what they did, they would build a cell tower, and every time they had an expense related to that cell tower, whether it was maintenance or property taxes or whatever, they would just increase the value of the cell tower on their books rather than hit expense. They said, well, it's going to have a long-term benefit to the company. So they increased the value of the cell tower. Well, that meant a lot of their expenses never hit the books. I noticed for the first time, I got a tip that WorldCom was a great stock in Atlanta. And I put half my wife's IRA into WorldCom. And this was back in the day when you didn't have instant results of your trades. And I noticed that I bought it at 8 and it was acquired at 6. And when I first saw that, I thought, man, I was lucky. Well, the next day it went to 2. And within a month, it was 0. But you run into my wife, don't tell her. And that's how she lost half her IRA back in the WorldCom days. Probably the biggest tip, if you're a small business, to protect yourself from fraud is to make sure your bank balance at the end of every accounting period, probably every month, equals and can be reconciled to your books. A lot of people do fraud. A lot of employees do fraud by writing checks to false vendors. I used to tell clients to have the bank statements when they had paper bank statements and you got the checks back in the envelope, or at least a PDF of them, to open the bank statement themselves and see who signed the checks. Well, you can't do that anymore, but there are techniques to balance your bank balance to your books every month. And that'll go a long way to preventing fraud. Same thing with inventory. Reconcile that to your balance sheet every month, just so you have a feel for what my inventory balance ought to be at the end of every month. Now the less exciting part of this presentation is I'm going to spend a little time for people who are new at business, just talking about the basics. And again, if you have a question, please give it to Matt, even if it's specific just to your business. The basic of accounting is called double entry accounting. And that means that basically every time you put write a check out of your checkbook, your check balance goes up, or something goes down, something else has to go up. Or when you have a sale, your bank balance goes up, uh, you ought to record a sale, or you bought something or paid an expense. Okay. Who invented double entry accounting? Well, this guy, Luca Paciolo, is the father of double entry accounting with Leonardo da Vinci, believe it or not, in 1494, right before Columbus found the New World. And it was a big deal back then, and it's basically nothing's changed. I know it's a pretty exciting slide here, and there's the other double. Basically, there are four, before we talk about double entry accounting, the predecessor to double entry accounting was single entry accounting. And that was accounting where nothing really balanced. You kept your checkbook, you kept your sales record, you kept your payables and receivables, but nothing ever balanced. There was no methodology for balancing. So you didn't record a check, you wouldn't know it. This list is helpful, the basic building blocks, but first item being your checkbook register. It's the most important thing to any business is your checkbook. But unless you have all the other pieces in place, like your list of payables, your customer receivables, your receipt book, you really don't know how you're doing. So these are the four major items of single entry accounting. And now I'm going to go to double entry accounting. The basic financial statements are your balance sheet. And that's a presentation of your company at any one point in time. Say, September 17th, how do we look? Well, if you prepared a balance sheet on September 17th, you know exactly how you look. Normally, these are prepared monthly. Income statement tells you how your business is doing over time, not a measure at any one point in time. Another statement you're going to see in accounting, if you're more sophisticated or been in business for a while, is a statement of cash flows. And it's probably the most underutilized accounting statement there is, but it also has a tremendous amount of information. If you just look at the balance sheet and P&L without looking at the statement of cash flows, you really just get half the picture of what went on at the business. Another thing, if you have a more sophisticated set of accounting records, you have footnotes. And footnotes tell you kind of the rest of the story. Like I mentioned earlier, an important footnote would be COVID. Again, it takes 5 years to get an accounting degree. So I'm just going to go through the basics of accounting, and one of the easiest examples of double entry accounting is how MasterCard might pay your bills. Say you charge $50 worth of gas at Walthall. You don't do anything except stick your card in and pull it back out. What happens that night, MasterCard, if you charge $50, they'll probably pay Walthall $48 or $49. So Walthall gets their money. They get $49. At the end of the month, you pay MasterCard $50. Well, the difference between $48 or $49 and your $50 is income to MasterCard. And that's double entry accounting. When MasterCard pays Walthall, their cash goes down and their receivable goes up. And their profit goes up because they're accrual basis. We'll talk about that in a minute. So they pay Walthall, they reduce their cash, and they increase what you owe them. When you pay MasterCard, all it is there is it wipes out what you owe MasterCard and reduces their receivable. What are the transactions that happen in accounting? The first transaction in any business that's going to be successful is a sale. A second transaction is a purchase. In the restaurant business, an example of a purchase would be food supplies or linens or silverware or salaries, which would go through your payroll. And we talked about cash accounting, which really doesn't give you the whole picture, but it is half the picture. You have to record your accounts payable and your accounts receivable. You have to know at the end of each month. At the end of each month, you pick up your financial statements on a cash basis. If you're in the restaurant business and you haven't accrued what you owe your vendors, it may look like you're profitable, but when you add your payables, it reduces your profit. It's another double entry accounting. Accounts receivable, same thing. Here's another slide. Fundamental rule of accounting: your assets equal your liabilities and your equity. The assets are the top half of the accounting statement, and liabilities and equity are the bottom half. It's just another slide. We'll go through a simple accounting example in a minute about a pizza restaurant, but let me cover one more thing for those of you who are a little more advanced. There's something called GAAP accounting, and that's generally accepted accounting principles. And that basically says you got to do it right. You have to have payables, receivables. You have to conform with a series of guidelines and rules. It's published by the American Institute of Certified Public Accountants, and that's all public companies are GAAP. Most larger small businesses are GAAP, and that's basically all it says is you book your receivables and your payables, pretty much. Other methods of accounting are income tax basis. Some people just keep their books on a basis that will allow that they use exactly for their tax returns. As we said earlier, some people use cash basis, and in a business that has payables, receivables, or inventory, cash basis definitely won't tell you the whole story. This is other basis of accounting, other comprehensive bases of accounting. Those are methods like cash basis, income tax basis that people use. This is pretty much tells the story about all these methods of accounting. It says, I'm not bad, I'm just misunderstood. If anybody that has been in the accounting business for a while understands what that is. If you'd like, I'll run through this little quick example of a Sally Sue's Pizza Palace. What you're looking at right here is a general ledger. And if you're on QuickBooks, I think this is probably the way your general ledger will work on QuickBooks. And let me just run through this real quick. These are transactions for the month of October. The first one right here, number one, is a sale of one pizza, it looks like. The credit, this is again double entry. Debit means it's an increase, so the increased cash by $12.85 and increased sales. This might be a sale to a takeout order that was taken to a large business, and you let them charge it. So then that becomes a receivable on your balance sheet and another credit to sales. Same thing with cash. You see cash going the other way. It's a credit. It's actually decreasing your cash balances by $176. And that's how you book your payroll tax expenses. The next one, if you go to Sam's Club and make a bunch of purchases and you charge them, you've got your purchases as a debit and your payable. So this is just all the transactions you normally see in a month. This is another account view of the general ledger, and that's all the transactions we just went over on the prior page. It's got the reference number if you wanted to study this. And that's what happened to cash. It went from $1,200 to $559. Receivables went from $288 to $447. Equipment went up. Depreciation, we'll get to that in a minute. That's called a journal entry. That's where you get this $98,000 of assets. They are probably going to be worthless at the end of 5 or 10 years. So you take a portion of the cost and depreciate it, and so forth. These are the rest of the general ledger account views. That just shows what happens to each account: mortgage, equity, your sales, beginning balance, plus the sales for the month of October or for this period, the $12 and $189. And you can go through each one of these, and I kind of won't bore you. If you want to study it, it's there. And then this is what results for the month of October, and there's the prior month as an example. And this is the balance sheet, and it's a picture of exactly what the company looked like on October 31. And it shows the equity in the business October 31 was $29,000. And they had, this pizza must not taste very good because they only had $5,800 worth of sales. And this is what their income statement looked like. So this is the balance sheet and the income statement. And it's all based on double entry accounting. And if you looked at, if it was, doesn't really do this, but this piece of the income statement, the minus 11,000, is the difference in the decrease. They lost $2,000 roughly in October, and that decreased the equity from 31,000 to 29,000. So the income statement, the effect of the income statement is included right there on this equity line. You can see it went down the same amount, the loss increased. There are other things that are called off-balance sheet items, and these are, if you were preparing, these are things that affect your business that if you're preparing financial statements, you want to include. For example, warranty claims. You sell screwdrivers, and you have a warranty in the package that says if this thing breaks in 5 years, we'll replace it for free. Well, you probably didn't book that on your income statement. Leases. How do you account for leases? Did the company guarantee somebody else's debts? This can be a big problem for small businesses, and it can put you out of business if the company guaranteed the debt of somebody else. And it happens in small businesses pretty regularly. Financial obligations of wholly owned subsidiaries. That's what Enron failed to put on their books. They were guaranteeing the debts of some of their wholly owned subsidiaries. They didn't tell anybody about it. Threatened litigation, if somebody is, for example, filed a lawsuit against Sally Sue's Pizza because it made them sick, that would be on the balance sheet that you ought to tell the people who read the financial statements about it. Unfunded pensions, you may have another liability that's just not recorded on the books. So today's takeaways are really, we talked about COVID a lot, and I hope that was helpful. And I hope I impressed upon you the importance of having good financial statements. It's critical to financing your business. It's critical for you knowing how you're doing. Your money in the bank could be going down, but you still could be a profitable business. Again, this is our final slide that says, I couldn't repair your brakes, so I made your horn honk louder. A lot of times that's what CPAs do. They don't fix your problems, they just let you know. And that concludes my presentation. I think Matt McKenna is about to come back on and say a few words. Okay, thank you. Matt?
you, John. Thanks for that. I appreciate it. We have a few questions that came in. One question that came in was trying to understand if I pay an accountant or bookkeeper, where does that show up in the financial statements? Because if it's related to accounting, do I put it on the balance sheet, an income statement, or where does that go?
That would probably go as an expense. It probably would be a current expense for that period. I can't imagine there would be a few times where you can put it on the balance sheet that would help you buy an asset related to purchasing the asset. So it's probably just an expense on your income statement.
Okay. But the other question was, do I need a different set of books for the taxes versus my business, or if I keep one set of books, can I use that for my taxes and for running my business, or how does my accounting and tax stuff go together?
That's normally you use the same set of books for taxes and accounting. One of the occasionally a business would be able to pay taxes on a cash basis, and the accountant would just make some entries. You wouldn't keep two sets of books, even if your taxes were paid using a different method of accounting, i.e. tax versus accrual. So that's something the accountant does at the end of the year. I recommend everybody use QuickBooks or something like that. Keep a good set of accrual books and go over it with your accountant and let him make whatever adjustments to get to the tax return.
Okay. The other thing question that we hear and we get a lot is the question about how do I pay myself? If I'm a sole proprietor, how do I account for money I take out of the business? Should I pay myself a salary, or because I've got a small business. End of the month, I got a little cash left over. I want to pay myself. So what's the best way to account for that, both to help me understand how the business is doing, but like I said, also to set me up so at the end of the year it makes my taxes easier?
It really shouldn't have much of an effect except for your self-employment taxes. If you pay yourself a salary, you know how that works. You've got an income tax deduction and you've got a W-2. If you take it out as a distribution, if it's a small business and it's a partnership or an LLC, well, then you're taxed on the profits of the business, and you may be better to take it out and not pay taxes on it. And it's just a timing difference, but eventually you'll wind up paying the taxes. So it depends on at the end of the year. If your business has lost money and you take out a salary, you've increased the loss. And if you're an S Corp or LLC, you can take the loss against your salary because you own the business, and it's kind of a wash. It really just gets down to payroll taxes and whether you want to pay self-employment taxes, which are pretty steep, or run it through the business. It really doesn't make that much of a difference. Over time, it doesn't make any difference.
And then I guess the last question I'll ask is, there's a lot of stuff. There's balance sheets, income statements, and cash flow, and people talk about P&Ls and all this stuff. But if I'm a small business owner, what's the one most important financial statement I really need to understand and keep an eye on?
I would say your balance sheet and your income statement, man. I don't think there's one, and they tie together. If like you said, if you watch your balance sheet and you check your cash balances and your inventory balances, and you get a feel that my balance sheet is right at any one point in time, and the income statement's right. So the balance sheet's the most important statement, but they're both pretty important to running your business.
All right, great. Well, John, thank you very much. I appreciate this. Again, this is a kickoff of our small business series, sponsored by the Greater Macon Chamber of Commerce, hosted by SCORE Middle Georgia. And so I'd like to thank everybody for joining. John, thank you very much for your time in the presentation. If you have any follow-up questions, you can reach out to us through middlegeorgia.score.org or through the chamber. We'll be glad to do that. We have more of these programs planned. If you have questions or ideas for programs you'd like to see, please let us know because we're here to help you. If we're not helping you, we're not doing our job. So I'll turn it over to Andrew. Do you have any closing remarks?
No, I really appreciate it. I think accounting is one of those things as a small business owner is the thing you ignore the most, and I speak personally on that. But it's something that you can never fully delegate and get rid of. You have to have a good understanding of this, no matter the size of the company. So it's definitely something that we need to be placing on top of it. So this is good to hear. Well, thank you for everyone for joining, and I believe this is it, right?
Yep.
Thank you, Andrew.
Yeah, that's it. We have a few questions. This is Kathy and Kay, but we'll get those over to John and get him to address those for you.
Okay. Yes.
Okay.
Perfect.
Thank you, everyone, and we'll end the meeting now.